Let's go BTC. All right. Okay, let me just go to this chart first. This is my index. Just let me have a look at the. I like to look at the context, which is the higher time frame first. Always. You're welcome. Very welcome to be here. Yes. Look at this. Let me just have a look at this. Look at this. This is the higher time Elliott wave count that I have. This is like really higher time frame. 1, 2, 3, 4, 5. We're in the 5 now. Potentially. It's a bit weird though, because you know, what was this then? Was that not an Elliott wave? Was that not one? You know, that's, if that was the 1, 2, 3, 4, that was the 5, and now we're on an ABC. That's what it would mean, you know, like that's the problem. Is this a 1, 2, 3? And if this was a 3, it was shorter than the 1, which means the 5 has to be shorter than the 3. The 5 is shorter than the 3. It would still be quite a distance if you do a 1-to-1. You still get to about $300,000. My target is about 290,000. That would be correct, because your 5 would be less than the 3. I just don't know what this is. What is this shit? There's no waves here. It's just like up, 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 up. Like 1, 2, 3, 4, 5, 6, 7. No idea. Unless 1, 2, 3, 4, 5. This is an ABC. Then what's this? Like, I mean, how many Elliott waves can you have? It's like non-stop. That's the problem. So I'm just, in my mind, I was thinking here, and that was just the beginning. It was just whatever. Unless there's 5 here and that just resets, and this whole thing is the wave 3. That's the whole thing, is the wave 3. Then we have to find 5 waves in this move up, and it's very hard to see. Maybe there are, and that was the 2 correction. 2. Maybe there's 5 here. I don't know. Potentially, yeah, 1. But you'd probably have to zoom in to get the daily time frame. Good morning, David. You'd probably have to zoom in to get the time frame. Look, maybe 1, 2, 3. I don't know. Or maybe there's a 1 down here. One, 2, 3, 4, 5. Okay, so let's just say that's your 1. A, B, C. 1, 2, 3, 4, 5. A, B, C. then you know that would be the wave. That would be the wave 5, not the 1. That would be the wave 5. And this is the 1. You have a 2 correction on the higher time frame. And this is the 1, this is the 2, and this is the 3. This would be the 3. I mean, I don't know if it matters, but potentially this is the 3 of the 3. Because I just don't know if we can ignore this stuff here. Like, I've got it from there, but it might be wrong. Let me just hypothetically change this a little bit. Hold on. Because I'm quite interested to see if I can... I just really want to look at this properly, because it does give you context. Yeah, the daily could make sense. I agree. All right. Just going all the way back. I'm just making this up here. So 1, 2, 2, 1, 2, 3, 4, 5. Maybe that doesn't even start there. Maybe it starts here. Let's just try and get 5 waves. So 1, 2, 3, 4, 5. Okay. So let's just say that's wave 1. Then you have an ABC correction. So 1, 2, 3. So it's really weird, but it's kind of like that. And you see the distance between this and this is tiny. Look, it's like within the same year. 2011, 2011, you go straight into your wave 3. So the waves are becoming a little bit, let me see. So let me just make this up. 1, no, that doesn't work. So this is like that. Maybe there. And then you start your 1, 2, 3. Okay. So that's your 1. This is your 2. That's your 3. We're looking for a 4. I mean, look at that. What the hell is that? It just goes up and up and up. I remember that. That was crazy. Well, let me just try and do the 5 waves first. That's a 1. Is it? Yeah, that's definitely a 1. So that's your 1. You've got your 2 there. What is this? I don't know. I'm just making this up. What did I have before? Let me have a look. Yeah, so I've got it from there to there. This doesn't really make any sense because you don't really have, like, how many waves are there? There's like thousands. 1 A B C D E 1 2 3 4 5. Or ABC correction there, and 1 2 3 4. That's correct. All right, that's fine. That makes sense. So that's that count. And so what you're looking at now is 1 2 3 4 5. Okay. From 2017 to 2020 was your higher time frame wave 2. How did I have it before? I lost it. Did I pivot there? So not this pivot, this pivot. So actually, like that. Then you have your, and I'm going to change the color now. A 1 2 3 4 5, and this I'm going to change to green. So I think this makes more sense to me. So you have your 5 waves complete, but the thing about 5 waves complete is you wouldn't then go into another bullish impulse. You'd go into an A B C A B. You'd have go into like a corrective wave 2 on the higher time frame, which would be like an ABC, ABC, maybe an ABC before you have your impulse. So this doesn't really make sense, because with Bitcoin, it just continues. That doesn't make sense, because as soon as you finish that, if that's your wave 1, that's your wave 2, wave 3, wave 4, wave 5, then you should go into like an ABC, ABC, ABC for the wave 1. Okay, let me see if I can find that. Good morning, Sebastian. How are you? Welcome. I'm just having a look at the Elliott Wave counts on the higher time frame right now. I've been meaning to do this. I just want to read. It's always good to relook at stuff and try and see things differently. See. Unless that's the correction. All the way down to there. I'm just imagining something different. That's what I'm imagining right now. And then this is actually slightly different. How would that work? Five. Okay. That. You have like a really tiny Don't know how. Does it change things? It does change things a little bit, because if you start the Elliott, because I've seen a lot, basically this original Elliott wave count that I had wasn't mine. Okay, I got this from CC Chart Champions, this higher time frame one that I've got. Yeah, this isn't my one. Put that together. And it basically, this is it. It starts 1, 2, 3, 2, 3, 4. This is not my count. Okay, this is someone else's count, and it may be correct. I think it could be correct, but I just don't understand this, and I don't know why all of this is being ignored, because I don't see 5 waves here, and I don't see a corrective wave to take us from wave 1 to wave 3, and because I don't see that, it kind of makes me question this, because that could throw people off. And the reason why it could throw people off is because here the 3 is shorter than the 1. So if the 3 is shorter than the 1, that means the 5 has to be shorter than the 3. Yeah, that would still put 5 at a healthy target of, at the most, just under the 1-to-1, which I have here, this trend based fib 1-to-1, from the 2 to the 3 to the 4 to the 5. The 5 can't be more than 346,000. It's still quite healthy. Yeah, it's so within, it's all, as 5 can get to the max that 5 can get to in this bull market based on this count is just under $346,000, because the 3 here is shorter than the 1. Okay, so this wave 3, this isn't my count, this wave 3 is shorter than the 1, and therefore 3 can't be the shortest, therefore 5 has to be shorter than the 3, which would put 5 at the very most just under this 1-to-1 figure here. Okay, and then you go into a correction. Now I don't know why the count starts there, because in my mind we have Elliott waves here and here, and so that's why I'm redoing this, to try and see if I could find something else that made more sense and changes the context of where we are at, just to have an alternative idea. So what I'm trying to do now is I'm trying to go all the way back into history from the beginning and try and make sense of the original data on the index and come up with potential. Anyway, so let's just say this is your 1, 2, 3. This would work, and you know the rules are very, oh actually this doesn't work, you have to follow the rules, and here the 3 is shorter than the 5, so then you're, maybe the 0 doesn't start there, maybe it's actually there. The way you can test this is by doing trend-based fib as well. Let me just do some trend-based fibs just to test this idea. It's a little bit laborious. Let me do it from here. Do you ignore this? That's impulsive. That makes more sense. And that's your 3. So let me just try this again. Yeah, you see, that makes more sense because it goes down to the 2 and then the 3 goes all the way up to this P up this pocket here. And then, okay, I don't mind that. And then let's do the same thing for this. So you have the 2 here, you have the 3 here, and you have the 4 there. And you don't have a strong 5. It just goes up to there. I like that because you can see there's alignment. You can see how the fibs are working. So let's see that's how that went. I don't really like this correction though. It's just a really flat correction. Hmm. 2, 3, 4, 5. 2, 4, 5. A, B, C. Maybe it's really messed up. 1, 2, 3, 4. 1, 2, 3. Is that better? That one over there. For an ABC, for an extended flat, But that 3 is shorter than the 5. Then the 5 doesn't go there. The 5 actually goes here. You have a B, C like that. Where's my directions? A, B, C like that. A, B, A. No. That doesn't work. Let's try this. Sure. It's quite impulsive though. Impulsive, making new high, coming to backtest the 3. Don't really like that. I think it's probably better. 1, 2, 1, 2, 3, 4, 5. And then the 4. And then 1, 2, 3, 4, 5. Okay, let's just scrap that idea. Let's just go straight to the top. Wait, let's just see this. Okay. Okay, that works. That's fine. Where's that start? Maybe there. Not sure. Maybe. So it go down to here. Right there. Prefer there actually. Yeah, I like that. Look. That's nice. Okay. Then you have this 2, you have this some kind of 1, 2, 3, 4, 5. Okay, so actually that was the 5 there. Where's my other stuff? Effectively, what I'm suggesting is you have the 1, 2, 3, 4, 5 like that. So your 5 actually is because you have a crazy 3, the 5 is less. That helps because if you have the 5 end up a little bit lower, then when you do your trend based fibs, you don't go to the top, you go to the end of the 5. It went up to the top. It doesn't work. It's better here. To that pivot. Let me have a look. Maybe. Right. What have we got now? Let me have a look. So potentially, if that's your 1, that's your 2, that's your 3. This is so messed up. I mean, it could be a 5 wave down too. It could be like an A, B, C, D, E. It doesn't have to be a 1, 2, N, A, B, C. But for the sake of ease, I'm not gonna. I mean, I could, but it doesn't really matter if I do, you know, whatever. Maybe to there. Doesn't really matter, does it? It's just whatever. It's just a correction. And then if that starts there, let me just see if the fib is an alignment. Yep, golden pocket, that's perfect. And then let's do some trend-based fibs here. 1 to 1 on the 3. Okay. Probably just a little bit over. It should be a little bit more. Not quite. It's perfectly on the 1 to 1. All right, and then this is 2017. I don't really know what this is. Just a jerk. I think you've got a really small ABC here. ABC, and then it just goes off. So if we do that again, at that. But he takes us to the 2.1618. There you go. Right to the top though. Okay, so based on potentially that idea, now then on the higher time frame, you've got your 1, 2, 3, 4, 5. Let me change the color of that to something else. Maybe orange. Maybe bold it as well. Okay. Some kind of complicated 2 correction, and we're in the wave. This was the wave 1, and this is the wave 3. That's very. I haven't seen this explained like this yet. I've seen the version that I showed you, but I'm just thinking slightly different. This does make sense actually, because you can see the 5 is less than the 3, and because the 3 can't be the shortest, the 5 is less than the 3, and potentially if you do a trend base fib from the low here, I'm doing it roughly. I'm not doing it exactly on point. It's the 1 to 2. Do from there to there. I know each time it takes you to the 618. Each time 618, 618. Doesn't really go further. Question is this correction here. Where does this wave begin? Because potentially that's the wave 1. So let's just, for the sake of argument, ignore all of that and just say that whole thing, this whole thing is one wave. This whole thing is one wave. And we have to find a corrective wave. And then this was our wave 1. No. I mean, it's quite a long wave 1 for such a short correction. How long is that correction potentially? 3 years. And your whole wave 1 was a period of almost 10 years. Let me have a look at this a little bit better. This is like a really complicated correction. Lots of zigzagging down. Then Chart Champions has the pivot to start here, and I know why they have it here, but I'm not fond of that beginning. I don't know if that's when it began. 1 year in December after the halving, but we had that here. No, is it 1 year? From November 21. Yeah, it's 1 year, isn't it? From the peak there to the beginning, it was 21. It's 1 year. So from the peak there to the beginning is here. And that is quite impulsive, look. That is quite impulsive, look. 1, ABC. One ABC. 1, 2, 3, 4, 5. See? 1. Look at the daily chart and see. One. One, ABC, 1, 2, 5. Don't really like that. I'm not crazy fond of that. But it does time well. That's the thing. Let me just try this fib time a second. And the question is, if that's the one, 1, 2, 5, ABC. Yeah, I mean, I kind of prefer it where this is where the impulse begins. So you have a much longer correction, even though that's how long would that correction be? That would be a 3-year correction. And then your wave 5, that's your first wave starting in COVID with a small short correction here. And then you power your 3 and then you have your 5. And that becomes your wave 1 of 3. So you've got your got your 1, 2, 3, 4, 5. That's wave 1. You've got your correction to the COVID low. That's your wave 2. Let me just see. Not fond of these dots, David. I don't like them. Let me try dots instead. Yeah, I prefer dots. I'm going to change them to dots. I don't like these dash light. It gives me like seizures or something, these dash lines. My friend David uses my trading view and It messes with my settings. Oh god, I undid that. No, save as. So the idea I have is somewhat different. You have your first 5 waves taking us all the way to 2017. You have a 3-year correction which culminates in the COVID low. And it's basically an ABC here, like a higher time frame ABC. You can draw out however you want, but it doesn't really matter. You're effectively I'm saying A, B, C. Okay. And that's when you have your next wave 1 of a higher time frame wave 3. That's your wave 1 of a higher time frame wave 3. You have your correction, and we're in the wave 3. The wave 3 of the higher time frame. If that's your wave 1, you have a correction which is basically a flat correction. This is a flat correction. You see this? It's pretty flat. Wave 1, flat correction. And on the higher time frame, we've had our wave 1 of 1. Which was COVID low to the bull market peak from the last bull market. Then you have some kind of correction here. I mean, it kind of looks like an ABCDE, to be honest with you. Kind of looks like that. And now we are in wave 3 of 3 on the higher time frame. This one here. So let me just I'll redo those fib times because I want to relook at the fib time because I like fib time. Basically what I'm suggesting potentially is that's your 1. This was your 2. We're in a 3, 4, 5. And that I'm going to change the color to blue. So you have this idea of diminishing returns, which everyone's been talking about. I do have a sneaky feeling that we might break that idea this round because it just doesn't make sense that you ignore all of this first data, because on the higher time frame, how do you ignore it? It was really impulsive. Wave 1, wave 2, wave 3, wave 4, culminating at a sensational wave 5, which really wasn't sensational because if you look at the distances, wave 1 was sensational. If you think how people came in at like 1 cent and they walked away at $20 or $30, that's pretty sensational, you know. How far did he get? $30, correcting down to $2, all the way up to $1,300, down to a few $100, $200, $150, all the way up to however high it got, $17,000. Yeah, I think that's your wave 1 personally. Like, why wouldn't it be? Why would you just ignore that? It doesn't make any sense to ignore that. You're basically, now I'm suggesting that that's your wave 1, that's your wave 2, 3, 4, 5 on the higher time frame. And make that red. And now we're in our wave 3. 4 can't come underneath 69,000. If that, no, not 69,000, it'll be here. The end of wave 1. So the floor is going to be the top of wave 1 now, which is this peak here, which is 19,000. So according to this, that was the end of wave 1. You have your wave 2. If we do have a higher time frame correction, the price can't get below that point. That would be really deep correction. But for higher prices, obviously you need a much flatter correction for higher prices. Who knows how high this can get in the future? No one really knows. And then potentially your wave 1 is the biggest. Your wave 3 is going to be maybe you will see a correction like that for something like that. Right, these are just ideas. So let me just put all of that together. Right. And then I just want to focus on where we are now. Okay. So I just wanted to sort myself out mentally. I mean, this does look impulsive too, but I'm not sure either. Let me just try some things with fib time. Hold on. Where does this start? Let's have a see. Let's have a look and see where it starts. There. So it starts to there. 1, 2. Okay. I mean, I do think we're going to put in a pivot at February 25. If that's correct. Otherwise, if it starts a little bit earlier, no, that doesn't work. That would be correct, potentially. And then the next one is 28. I do wonder if we just we have a crazy all the way up to February next year. We just go up and up and up and up and up and up. I do wonder. I am thinking like that at the moment. 1, 2, 3. This is our wave 3 that we're in now on the higher time frame. But that would have been the wave 1. This is the wave 2. Now we're in 3. The 4 can't come underneath that. And then you have a 5. How far can the 3 go? Depends on the distance. If it's less than the 1 or if it's more than the 1. And they have the 5. With fib time, I like to use the weekly time frame. Good time. It gives you kind of an area of interest. This is saying January now. Maybe because of the where it started. I'm not sure. Maybe it starts here. The impulse. Now it's December. See that? I think it's because it changed here. Pivot to pivot. Pivot to pivot. To pivot. Where's the pivot? It's there. Basically, it's there. That's the pivot. Pivot to pivot to pivot. It's end of January. That's your wave 1. We're in a wave 3 now on this local time Elliott wave count. And then could we get up there and peak sometime in January, February? I'm not sure. It's either that or this is that. That doesn't make sense to me. Yeah, I do feel like we get to $290,000 by January somehow, or February, sometime around there. Can I get anything to line up? Let me just have a look. Let's just base from this to this to this. The 0 to 1 to 2. If it was slightly back to here, it would pretty much be in the same area, to be honest with you. Look, slightly higher. But I'm preferring this pivot here as your 0 to 1 to 2. The 1 being the wave 5, which culminated here. If I want to get exact, it would just be right to there, right to there. And this one is correct to there. One to one would put us at about 280,000 thereabouts. I mean, look at the trajectory. It's kind of doing it. That's the thing. It's kind of doing it. And you could potentially get something similar to this. You could get, oh God, you could potentially go up. Latecomers come in. You know, you could potentially get that too. And then your 4 can't come underneath 70,000, 69,000 because of the 1. And then where would that put us with the fibs on the pullback? We go up that far. Full fib log. 50% of the range. Coming back to 50% of the range. Yeah. This whole thing is a range. The whole thing is a range. All the way down to there. 50% would put the all-time high. So your 4 comes all the way back down to about 60, 69, 65, somewhere around there, depending on whether the pivot high is put in. That could take a year or 2. for a push up in the wave 5. That would complete. No, that doesn't make sense, does it? I don't like that. Well, maybe I do. But then that means this 3 is actually all the way up to there. That's what that means. That would be your 3. So let's just imagine this higher. I'm imagining a future where the whole world is using Bitcoin, yeah, and when every country is using Bitcoin as their reserve currency. Like, I think it's happening. I think we're seeing it now, where we're at the beginning of something unbelievably game changing for the financial services and industry, financial industry, banking and all that. And I do see a future where gold is replaced as the reserve, and where Bitcoin will become the reserve currency for the future. And so it becomes limitless, really, the price potential, because whereas gold is quite difficult, people can't just buy gold, whereas Bitcoin, everyone can just buy Bitcoin. Like, so if the whole world switches on to Bitcoin, the whole world, and starts, if it becomes used by the whole world, then we are looking for higher prices, and potentially infinitely higher, if it becomes the actual store of value which people are imagining. People don't really use gold as store of value because it's hard, it's inaccessible, it's difficult. But Bitcoin is relatively easy. Relatively, it's not easy for most people, but it's relatively easy. So I am thinking of higher, in the higher time frame. Let me just think what could happen if that's the one, that's the 2. Crazy one. I mean, that's your expansive one. So I'm imagining the 3 and the 4 and the 5 to get less expansive. Now, we don't know where that 3 is going to land, this one. But I am thinking that we are in the 3 of this wave. This is the wave 3. So that was the wave 1 of 3. This is the wave 2 of 3. This is the wave 3 of 3. Okay. Then we have a 4 of 3. And then we have a 5 of 3. And that will terminate 3. Technically, the 4 can always come back down to low. It'd be very unlikely, but... And then the 5. It doesn't really matter. I'm going to wrap this up soon because I've been on it too long. You guys are probably bored. Is anyone bored? I don't know. No, people are probably like, oh my god, this is boring. I'm not bored. I think we'll know when we get into the potentially. Let me do this fib accurately, because I think we'll know once we get into the 618. There's a reaction. That's your clue, right? Now I'm using the index. Usually I use Bybit. I prefer Bybit. Inverse perpetuals to chart, and I'll probably replicate it on Bybit. But let me just get it accurate here. Just to the magnetic tool to the pivots. And so I think that the question is, do we get a reaction at this level, 91,000? And that basically is a trend-based fib from this pivot to this pivot to this pivot. If we get the first reaction there, and usually when you're going to look for a reaction, there has to be confluence. I haven't been looking for confluence at the moment. I'm just contemplating a higher time frame idea. Series. So that's all the previous ones. I'm not going to bother with those potentially. One to the two, if that's the two. Then your pivot is sometime at the end of this year. Yeah, at the end of this year, you're gonna. That's when the three. I don't know if it ends. It doesn't have to end. It's just a pivot. Let me save this as dotted because I want to have my lined one as well. I changed it to no. Just want to make one of them lined so I can see the difference between them. One is dotted, one is lined. No, I think. Okay. Let's try something else actually. 3 to the 4. See what that gave us. 1 to the 3 to the 4. You see the 1 to the 3 to the 4. See that? The 0 rather to the 3 to the 4 gave us the all-time high in December in fib time. You see that? The 0 to the 3 to the 4 gave us the all-time high for the 5. 0 to the 3 to the 4 gave us the 5. So based on that idea, let's try something else. 0. Okay, we haven't got it because we haven't got the 3. Okay. 0 to the 3 to the 4. We'd have to do it on the local time frame. So we haven't got that either. Let's try it here. That's the 0 to the 3. No. One, two, three, 5. That isn't a, this is an impulsive wave. This is an ABC. You see that? ABC. ABC. I don't see 5. Well, maybe there's a little bit at the end. I'm just going to go with this for now. On the local time frame, we are in the wave 3. So one, 2, 3, 4. 5. Alper, good morning. How are you? Thanks for joining. I'm just going over Bitcoin Elliott Waves, actually. Probably boring for most people, but I was going to do it anyway, and I'm just going to do it, and you guys can watch if you want. 3. We're almost coming to the end of the free. Maybe at about 90,000. 4. And take the 5 up to there. Just try this time. I need the 3 and the 4 to figure out the 5. Because usually it's from the 0 to the 3 to the 4 to get the 5, to get the last one. And trend-based fib. Yeah, that's when it began, and that's how you got that one. Just do it from here, or maybe it's from this one. I think it's there actually, from the low to the might be better to zoom in on this on this local action. 1, 2, 3. I prefer that there. I prefer it there. I think it's there. One, two, no, maybe there. 1, 2, 3, 4, 5 to 1. And then where there's the two ends, there you go. Zero to the 1 to the 2. That's the A, B, C. It's quite impulsive there too, though. If that's the 1, it's probably there then. And 1, 2, 3, 4, 5. A, B, C. Okay. Where does that give us there? Don't like it. This is probably here. One. I think it was better because it gave you the 618, which is what I had before. I think that's correct. And then I lined that up with this one. So from there to here to here. I think I lined it up. What's the... Yeah. I lined it up to there, and that's how I got that little area there for resistance, because you had an alignment. So that's actually pretty correct. And so that gives us one. Don't like it though. No, I don't like it, because that's an extended flat. Should be there. 1, 2, A, B, C. So this is actually probably slightly higher. Just move it here. And lower. All the way to there. One, two, three. Okay, that's better. I think it's better. So actually the impulse started here. A, B, C. That was the correction, and then impulse, impulse. All right. And that gave us that target there, which lined up. That's how I did it. Okay. So actually what we have is one, two, three, 4, and then our 5, probably 2, 93,000. 91, 93. Let me just change the color there. To maybe one I haven't used before. So I've got 2 trend-based fibs at the moment. I've got it from here to here to here. And the reason I like it the reason why I like it is because I've got alignment on this current high that we've put in. You see this 73,000 mark? I want to make sure that we have two alignments correctly at that level. Okay, here, there. Okay, so we have two fib extensions that match, and for me that's gives me some kind of confidence that I'm using the correct pivots for, you know, because it's quite subjective, you know, there's no absolute, it's very subjective. So I'm just trying to get the right pivots and also keep within the spirit of the rules of Elliott waves and try and count the waves too to make sure you have the correct waves. Yeah, you have to count too, you can't just make it up. And so I kind of like where we landed with the confluence of this one, which is from the 0 to the 1 to the 2, which gave us the 1.618 at 73,503, and this one, which is from the 2 to the 1 to the 2 to the 1, the 2 to the the local 0 to the 1 to the 2. So there's two in play here. There's the higher time frame 0, 1 to the 2, and this is the local 0, 1 to the 2, because the idea is that this was your wave 1. You had an ABC correction here, which is your wave 2, and now we're in the 3, and obviously the 3 consists of 5 waves. So I've taken the 0 to the 1 to the 2 of the wave 3. This wave 2 was very flat. It was like an extended flat. And that gave me, on the 1 to 1, it gave me the same, basically the same alignment with the other Elliott, with the other fib extension, which is the 1%. So I like that. I think that makes sense, the way I've done this now. And then in that case, what am I thinking? And I like that on the weekly time, or is the 3-day time frame, we're holding support here. Do you see that? We've held support on these back tests of these fib lines, which is something what often happens with fib lines. If you just power through them, you still have to come to back test them. Yeah, you can't just power through fib lines. Like, they don't always resist. Yeah, so if you resist, then the next time you can power through. But if you power through, then you have to come back to test. Yeah, does that make sense? And sometimes it tests more than once, and sometimes it takes a little bit of time. So if you power through, you usually come back to test, or if you go to test and it reacts, then the next time you could potentially just power through. That's kind of how it is. It's just an observation. So we had a reaction at, so the next time we could power through, or we could test again, potentially test again, because I am thinking we should do an ABC correction here. The question is, how does this ABC look like? Is it going to be similar to this? Yeah, like an extended flat. This would be an extended flat. You kind of come back in for support to go up. You see what I'm saying? We don't know. Actually, that would not be an extended flat. Extended flat would be to go up and to go down. Something like that. There's so many ways that this can create. I think the most bullish scenario, go up, find support here. That would be the most bullish scenario. But if you want to squeeze up, then you have to go up, lose the all-time high again, head all the way down, take out the liquidity here, and then power through. If you want to squeeze up, that's how it has to happen. But if you end up going up and then you come back and back test and hold the support, it's just as powerful. You know, that's just as people will just start longing from there. And that would be fine too. That would be perfectly acceptable. There's nothing wrong with that. You know, that's even better, because the market just is just really crazy bullish. I'm seeing a bullish reaction here. Yeah, this is a bullish reaction. This isn't something to be ignored. It's almost like a V-shape recovery, what I'm seeing here. And it's not weak at all. I'm not seeing weakness yet in this kind of behavior. There's still 1.5 days left to go on these candles here. And I think in my previous streams I did say that I was seeing some kind of inverse head and shoulders on the 12-hour time frame. Now, what would destroy people is if we go down. Yeah, so the correction can happen many ways, and we don't know how it's going to correct. I think what we're seeing now is a B of this this correction. That was the A. This is the B, and it's ABC, ABC. If there's a correction, it's ABC, ABC, ABC. It's not 5 waves, unless it's an ABCDE, but this doesn't look like an ABCDE. So if that's an A, this is the B, and you can already see that we've done an ABC of the B already. So I am thinking that it could reverse for another A, B, C to go down. Now the question now is, how far do we go up before we reverse? I'm not seeing weakness just yet. Okay, I'm not seeing it. And I think a really important line in the sand for everyone to just have on their charts is this previous all-time high here from the last bull market. Obviously every chart is going to have different figures. I'm using the index, so the figures aren't going to be the same as what I would normally use, which is Bybit. Just mark it out. This is really an important line. And at the moment you can see we're above it. You would expect a back test. If we want to continue going up, you would expect it to back test. Yeah. That's what you would expect. You wouldn't just expect us to not backtest if you want to go for higher ground. It'd be very weird to, because people like to see support tested, and then when they see support tested, that's when they can take a trade, because then they have an invalidation. Right now, what's the invalidation? It's when you zoom in, you don't really have a test. You know, you want a test. It doesn't even have to get to the previous all-time high. Potentially, you could just, I mean, you could just SFP these lows, and that would be your test. That would be enough, I think. A little bit of a front run of the previous all-time high, SFP the lows, head right back up. Okay, liquidate all of these late longs, get people bearish, get people shorting into the lows for continuation. That's very possible. Okay, I'm seeing the fact that we've gone above the previous all-time high is a sign of strength. So you wouldn't right now be thinking short. you'd be thinking to short higher up, or you'd be thinking to short as we lose this previous all-time high, because then that would be a sign of weakness. So basically what you're looking for to short, you're looking for a sign of weakness, and to long, you're looking for a sign of strength or swing failures in either direction. Okay, that's what you'd be looking for. So right now you wouldn't long, you'd be looking for a back test and probably a swing failure of this local low. That would be a long. And for weakness, you're just waiting for higher up, some kind of swing failure higher up, or a failed auction, or something that tells you that gives you an indication of weakness. Not seeing it right now. And losing this previous all-time high would be weakness. Okay, so that's a very important line. You can see that it's reacted. That's just on a local time frame. I am expecting some kind of ABC, right? Now, no one in this whole world can tell you how this APC is going to turn out. No one can tell you how this correction is going to be. We got ideas of how it could be, but they're just ideas. I have an idea of a harmonic, a bullish harmonic. It's just one of idea. This could just as well go up and come back down and hold support to continue. It could correct just like that. No one knows. Yeah. As long as you hold the all-time high, it's going to look quite bullish. The previous all-time high. So what am I thinking now? In terms of targets, like looking at the charts now, I am thinking probably about 91 to 93,000 for the end of 3. That's what I'm thinking right now. If it overextends, then you will go to about 100,000, of course. And if I line that up with these higher time frame channels, yeah, you see that? You've got a little bit of confluence here on that channel. When would it happen? Sometime in the summer? How would I time this? Let me have a look. Let me see if I can time this. Nope. Like how that lined up there. That was from... Let me just do this accurately. Look at that. This is the daily chart, but I do like how it just the 1.618 just precisely. I do like that. Could we see wave 5? I mean, could wave 4 go all the way to the end of, like, this is the thing, look, maybe this is going to play out based on fib time. Maybe we see a wave 4 pivot sometime in at the end of April. Who knows where it's going to be? Like, literally no one knows. If anyone tells you they know, they're basically lying. Okay, no one knows. And it's just ideas of what could happen. No one really knows. It's speculation. And maybe could we get all the way up to 91,000 by the end of June to complete your wave 3? And then you're in a 4 correction. Four is going to be quite longer. Look at this. This was an ABC. How long did that take? It's like a month and a half. Month and a half correction. If it's the same as the 2. That's longer. Maybe all the way back down to just to test the previous all-time high, give people a chance to FOMO in or load in. Who knows? And then power through. Let's just say for the sake of argument, the 4 is there here on that time. Let me see something else. Give me the golden pocket. If the 4 comes back down to here, to the 5, to the 4, that'll be the golden pocket. Back test this all-time high that's currently put in. Yeah, I don't know if people understood what I just did, but could work. Depends on how low we go here. Obviously, I'm just assuming we come back here. I'm not assuming that we take out these lows, to be honest with you, because I just think the price Bitcoin is really bullish. We're making higher lows. We just keep on making higher lows. That tells you that the balance is sided to the bulls, because the bears can't make lower lows. The bulls are defending the lows. Yeah, there's too many limit orders. Yeah, you see when you see these higher lows here, look how bearish this descent is. Look how ugly this is. The red candles, terrible. And that's it. There was just too many orders to prevent the price going down. That's really what happens. That's really what's happening at the moment. So that's why you're seeing higher lows. In the future, you're going to see swing failures. It's going to be a slightly different behavior. Doesn't mean we can't go down and flush out the liquidity from the leverages, but at the moment we're making higher lows, and so it's just giving me an indication that it's extremely bullish. And you can't, like, even though they want to flush out the leverage, the thing about these trading accounts, they're very advanced now. So you've got these like really complicated cross margin accounts. People can have a diverse portfolio of tokens, and they can use the diverse portfolio to leverage Bitcoin and vice versa. And it's giving people a lot of power to buy when it dips. Okay, and because it's a cross margin leverage account, their liquidation levels are probably lower down, much lower. Yeah, so they don't have to isolate the way you used to so you have really small, really tight liquidation levels. And so you can have a cross margin account, you can have your liquidation level somewhere down here, and every time the price dips, you can just sip the dip. And that's what's happening right now, which is what I'm seeing. Okay, so even if the price goes down, I'm not really seeing the crazy liquidations yet. I think that's going to happen at the end, where you get a lot of retail jump in and they don't have a clue what to do, what they're doing. Okay, they might 100x leverage and hope for the best. So look, so what am I saying? I'm saying that if we were to go up on here and then come back down to here, then potentially, if we do it from the 0, which is here, where's the 0? Yeah, that's the 0 here, to the 3, to the 4, it's something to just think about. I'm not sure. I'm going to keep an eye on it. The further it goes, the easier it's going to get. If that's the 4. Yeah, you see, if that's the 4, we would have a really strong confluence at about 90,000 if the 4 comes down to there. It does line up, and it lines up with this channel as well that I have, this bull market channel. I don't see why we would not react from there for a correction into the 4. I almost think the 4 should be longer. Sometime in October. And then you'd have like an A, B, C, like that, like a real deep correction. And then power through to Bitcoin makes its all-time high in January 25. That's it. Pumpy pumpy. How far could you go? Another trend based. If we go from 4 to 5 to there, I do like that higher number up there, to be honest with you. I do like that. But you can see, in all of these crazy lines, you can see this green channel that I've got. Yeah. Let me delete all of these now because they're not relevant. Let me just mark out the area of interest. Actually, it's here. So I'm going to create a box there. You'd think that would land in a pivot, to be honest with you. So probably further in August. Probably in August, actually. That would make more sense. Couple of months of sell-off into October. Sell-off August, sell-off October, September into October. And maybe come to backtest this level for continuation. For your wave 5 pushing up all the way into January 25. Now you've got this green mid channel. So if I was to hide all of these now, Yeah. And then bring them back slowly. And keep that one. Yeah. You've got this green mid channel. So if you look at the higher time frame, I've got two channels that I'm looking at. I've got this white channel, and there was it's basically from the top of these two highs to this low here. So it's basically the last bull market. It's basically from there to there. It's a channel just based on that. I do like it. I like it because we had a back test here. We had a back test here. We had a reaction. When you see reaction at the midpoint, that kind of gives you the indication that these channels are quite good. We haven't had a reaction here, but it looks like we've come in to back test it. It does look like it's been front run. So that's something to bear in mind. And then you've got this green channel, basically from the COVID low to the current bear market low. Just this bear market last 2 years ago, in November 22, from the COVID low. And I'm taking it to the end of the last bull market peak, ignoring the first peak and ignoring this 2017 peak. Again, the reason why I've got this channel is the midpoint. When I look at the midpoint, going back historically, I can see some kind of reaction at certain places, which makes me think that it could be a good one, but we have to see. So potentially, look, you see here, if free, well, this is where we are now, and we have to see where we get up there. If you were to get up to 90,000 at the end of April, you're coming into a heck of a lot of confluence for a rejection, because you're hitting the midpoint of that green channel, the top of this white channel, and some strong fib lines. So timing is quite important, but I'm not necessarily imagining that we're going up to 90,000 by May. Still think we're correcting. And let's say we do get up to that level on fib time. And this is just one idea of fib time. I'm going to play around with it, but basically from 0 to 3 to an imaginary 4. This is an imaginary 4. Sometime when Bitcoin halves, you get your 4 pivot, and then the price just goes up. Then your first fib time is sometime in August. That's when I'm thinking maybe around that time we get to 90,000 for a correction, all the way through to October. You have to break above this white channel, and then you're up, pushing. The question is, how far do you push? That's the question. And then I think the one thing that I have in my mind is if you do a fib extension from this last bull market all-time high to the bear market low, yeah, I'm not expecting to get above roughly 126,000. Okay, this is the caveat. There is a caveat. If it starts going through that level and starts powering up, then I'll be looking at my higher target. So this is a question: does the free end there for a weaker free? That's a weaker free. If it ends there, that's less than the 1, and then the next one would be weaker. It'd be a weaker 5. Or does it just power through? And you'll know, because I'm not expecting for many reasons, and I've explained this in previous streams. I'm not expecting us to get past this kind of area, and simply because of diminishing returns. If you look at the expansion on every bull market, it's always less, and it's about 60% less on the log time frame. On the log, so not on the log time frame, the log chart. So let me just hide these channels now. So if you see from here to here, if I was to take that, it's about 60% from here to here. If I was to take that, you know, it's always less. The next move is always less. So this one, that's it. But that's the top. You're always less. So you're looking at about, you're not looking at the same, you're looking at less. That's the point. Don't know if I'm explaining it well. Probably not. So from there to there, see this last one, it was about 60%. So I'm expecting about 60, but that would be on trend with the past. Break the trend, then you're going much higher. Yeah. So in my mind, I'm thinking there to there. And now we're thinking about 60%, maybe 70. Okay. That would be on trend with the past. Not the full distance. Okay. Now, if we break the trend, and so far we're breaking trends because we've made an all-time low before the halving. We've closed above the 618 before the halving, the inverse of the 618 before the halving. So at the moment we're breaking the trend. So I am interested to see if we get past that level. And so when you do an extension, so I'll show you what I mean. I'll do an extension from here to here. And it got just past the one, it got to the 1.618, kind of held the support and then lost it. Kind of another rounding top, and then it back tested it. You see that? That's the 1.618. So it got as far as the 1.618. In the previous markets, when you do an extension, it went well past the 1.618, went past the 2. Yeah, so it really went past the extension. It really extended, and then this one, from there to there, look at that, it went past the 2 again. So these are quite explosive. They were quite explosive, and it's been getting less and less and less over time. Look at this expansion here. This is over 2. They were all over 2, over 2, over 2. This last one, it was slightly less. Just past the 618. So if it was just go to the 618 or just past the 618, that's at 171,000. If it's less, it's probably going to be about 126 or so. That would be on trend, diminishing returns. But I'm actually interested to see if we break the trend this time, and then I'll be looking for 290,000. Yeah, and no one can know. No one can know what's going to happen. There's no way. There's no way to know. We just have to follow it very carefully, and we're going to have to count the waves. Basically, I think that's going to be the easiest way to know are where we are in terms of the bull market, is counting, just counting the waves. So that's why I'm kind of like really, historically, it doesn't really matter what wave we are in on the higher time frame. All that matters is that on the local time frame, we're counting correctly. And at the moment, we've completed our 3 of 3. We're in a correction, A, B, C, which will be our 4. That will then we'll go into a 5. That will complete the wave 3. Then we'll have another corrective wave, which without guessing, it's probably going to be an ABC. It could be something else. And then we're into our wave 5. And that's really, when you get to the end of the wave 5, that's it. I think it's very unusual, this Bitcoin bull run, because this 2 was quite flat and we're just powering up. I think it's very unusual. I think we've had a really short bear market. I'm not fond of this bull market starting here in 18. I think it started in COVID, personally. I don't think it started there, but I mean, I could be wrong. I could also be wrong. Yeah, I'm not. I know other people have put it here, and that would put the 618 at the bear market low, which may, you know, which is an indicator a little bit, whereas from here it doesn't give you anything. So potentially I'm wrong, just because of fib time. Potentially it's there. Just, I don't know. I'll have to keep an eye on it. Did the bull market, I don't know, did the bull market start? Can anyone tell me? Did the bull market start in 2019? There. Did it start there? Doesn't look like it started there to me, because of these red candles that followed. Well, that's 9 months of red. 3 months, 3 months, 3 months. It's a very unusual bull market. All these other bull markets, it's just up, 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 look, up, up, up. If it started there and you ended up with 3/4 of red, I feel like this is an ABC, and that was the bull market. Doing that on the weekly to see if on the weekly it looks better. That's fine. Maybe to there. This doesn't work at all. So maybe it's not like that. Maybe it's try something else. Nope. Let me try something else. Yeah, maybe this is over there actually. Makes more sense in terms of fib time. Time is really important. It's a really short bear market for the overall. So I'm not sure. All right. Anyway, it's just an idea. These are just ideas. I'll be looking more closely at the local time frame on the daily chart to see where we are. I think we're in an ABC right now. We've completed our wave 3 of 3. This is the A, B, and then we're looking for the B to complete, and then we're into a C. Okay, and this is much more complicated. It doesn't have to be an ABC. It could always be. It could always be something like that as well. You just got to bear that in mind. It could be more complicated, but just without going into complications, being very simple. I'm thinking we do an ABC, we come back down to go up, and we're looking at around 90,000 for some kind of resistance, fib resistance. Yeah, that's what I'm thinking right now. And then we go into a wave 4. That would make sense because when the Bitcoin's at 90,000, people probably will be taking large profits. Maybe then some people are going to FOMO in, pull all the way back to back test certain levels, maybe all the way to back test this high here, and then we go up, and then we have to see how crazy it gets. That could probably be sometime in October, I'm thinking, and then maybe it will just go up and up and up and up, and then we just have to count the waves. Basically, that's what I'm suggesting. Once we put in our 4, the last final 5th wave, we have to count the waves. And to all intents purposes, this is much shorter. This is not going to last all the way through to next year. We're finishing the waves. We're running out. Yeah, we're running out of waves. Does that make sense? We don't have many more waves to go before we finally end this move. Okay. And that's something to bear in mind. It's something to bear in mind. So we're in the wave 3 now. We've completed the wave 3 of 3. We're in the 4 of 3. And then we're in our wave 5 of 3. Then we're looking for an ABC, which will be our 4. And then the last wave will be the wave 5. And the wave 5 will again be 1, 2, 3, 4, 5 waves, with 1, 3, and 5 being the impulsive ones. Okay. And in the last bull market, yeah, I don't know really when it started, to be honest with you, but let's just say it didn't start at COVID, it started earlier. I'm not sure which one it is. That's your wave 1. This is your wave 2. That's your wave 3. That's your 4. And that's your 5. Okay. So it took a long time. Like, you see that? Like, from the wave 0 to the 1, and this correction, this first correction, it was, look, 200, it was almost a year. It's almost a year. After you did your wave 1, you were correcting for a whole year. We didn't see that here. This correction was less than half a year. Yeah. So I think the timings are getting squeezed a little bit. We're going to run out of waves. All right, any questions on that? Anyone have any other ideas they can add to this? I'm not entirely sure about this, because I know that, I mean, the account that I have before I copied, and they have the last market wave starting here. That would be a short correction. It's quite short though, like, but the thing is the fib time works well to time the all-time high here. And also when you do a fib time from here, I'm going to do it again. When you do a fib time from here to here to here, you get into the times the bear market low very nicely too. And that's why that helps. It helps give you confirmation about these important pivots, whether they're correct or not, when you're using trend-based fib and fib time to give you the confirmation that you're using the right pivots. Okay. I like to think that we are in a wave 3 now, and so therefore the higher time frame wave 3. So I like to think that this is going to be extremely bullish, and we're going to get higher because we're going to get some kind of shorter but more crazy behavior from October all the way to sometime in February, January, February. That's what I like to think. I like to think that we are going to go higher, and you're just going to get this crazy parabolic FOMO, and then that's when we're going to see alt season, and that's it, game over. And it's just going to be a really short bull market because we're going to get this crazy push. All right, looking at the local time frame, I don't know. So obviously yesterday I was thinking, I said in my stream yesterday that it could either go up or down. I was in a short because it was a good place to short, but I was only risking a very small amount. And my idea was that if it went down, I would add to it. Sebastian saying, this is pretty much what I was thinking on the macro scale. You're a genius. I'm not a genius. I'm a bit obsessed. That's what I am. Replace the word genius for obsessive. I said it could go up or down, and it went up. And the reason why it went up was because people were looking at let me just get rid of these this stuff. People were looking at this inverse head and shoulders, which I identified well before it happened. I was saying there's a right shoulder forming. I think I said this a few days ago, like last week or something like that. And it's going to be pretty obvious to people what's happening. You know, you make a higher low. The neckline was sloped, you know. As soon as you break the neckline, you go up. Okay, and you're basically squeezing up with increasing volume. We broke above the all-time high, the previous bull market all-time high. I do think we're going to get a back test, but David is saying that we have bullish div divergence on on BTC. Let's have a look. don't think I can see it. I can't see it. Oh, slightly, yeah. There's very slight bullish divergence. The price here, you see the pivot here, the CVD was higher and now the CVD is lower. The price is slightly higher. It means that people are absorbing the selling here. That's correct. David is absolutely right. There is some CVD divergence only on this local last bit of price action. If you look across this whole price action here, I can't see any divergence. Yeah, CVD going up, price going up. There was no divergence. There was a little bit of divergence here. No, it wasn't, because you didn't make another low. So yeah, there was. See, look. So you see here, higher prices, lower CVD. So we're getting the same thing here right now. Higher prices, lower CVD. So we're getting a little bit of absorption. Exactly the same thing as what happened here. The difference here is that we got liquidations here. You see those liquidation bubbles? That's exactly what you want to see. You want to see liquidation bubbles. When you see liquidation bubbles, it means the price is probably reversing, because you're getting massive amounts of market sales at the lows. And if the price doesn't go down, then the price goes the other way around. That's why the price went up. As the price came back down, you're getting CVD, bullish CVD here, and the price just goes up because there's just not enough selling. There wasn't enough selling, and the price was the buyers are overpowering the sellers. You can see here increasing OI, and these are longs entering, shorts closing. This is longs closing, taking profit probably. Shorts closing, and just generally speaking, a lot of this is shorts closing. You can see the OI is dropping. Shorts closing. You're obviously getting longing as well. Now here you're getting shorts entering. The price is going down, the OI is going up, and they're getting squeezed. You can tell that they're getting squeezed because as the OI goes down, the price starts to go up, and it goes up a lot. So there isn't really many people selling. All this up there, you've got longing in the highs effectively, and some shorting. Longing in the highs, and then longs close. Longs close, probably because they got trapped. OI is going down. OI is going down. The price is going sideways. What does that mean? OI is going down. The price is going sideways. I mean, it's basically longs closing. Like when you see this price action go down, OI is going down. You've got some shorts entering here. You see that shorting? There's a bit of shorting going on here as well. This is shorts here. What's this? This is a big long. Price goes up. A little bit of bullish divergence here. Longs are closing. I'm not seeing crazy amounts of longs entering right now, to be honest with you. So maybe they're looking for lower prices, or maybe they're waiting for the New York Open. It is possible we go back. This is what I was thinking. We go back to test this bull market all-time high, or just take the liquidity from these lows here. And you've got some bearish candles here. You see these 4-hour candles. They're not bullish. See that? That's a bearish pattern. A wick, close into it and close down on the 2-hour time frame. That's bearish right there. Decrease in volume. This isn't bullish at the moment. What's the daily like? Maybe we come back to test the daily open and even lower and then push up. Just, I think we needed a back test on this previous bull market high. I don't like the way it looks right now. It doesn't look clean. And then the question is, does it hold? Then that's the question. Because if it doesn't hold, then we're going down. And that's the reality of what could happen with the price, you know. That's done. What else have we got? That's finished. So I have this I have this harmonic idea which I'm toying with. We're not on time at the moment. On time would be the weekends. And now that the price has gone higher, this pivot would have to be higher. And if we go higher, then it's none of these patterns. The C isn't higher on any of these. But there must be one where the pivot is higher. So let me have a look. Harmonic patterns. Let me draw another image. Bullish alt bat. Nope. Anything anywhere the C is higher, that's it. The bullish shark pattern. The bullish shark. So a cipher, they don't have cipher here. So a cipher would be a lower C, and a shark would be higher. Nope, the shark doesn't work, because if it's a shark, this has to go all the way down there. Crazier. I'm not foreseeing that, to be honest with you. I much prefer this if we don't take the all-time high. If we don't take the all-time high, then maybe this is in play. I think if we do take the all-time high, then I wouldn't be thinking about potentially I wouldn't be thinking about a harmonic. Maybe we just come back down to test, and it's just like an extended flat, and then we go up. We don't take the lows, we just make higher lows. So let's just see. This is just one idea. It's very speculative. It's fun to speculate. And if it starts to do what I'm thinking, then I could take the trade with confidence, and I could probably do it, leverage a little bit more, you know, risk a little bit more. 618 puts it there. So that would be Sunday. Let's see where the price lands on Sunday, because that would make sense, you know, a sell-off on Sunday, weekend. Let's see how the week ends. I'm not really thinking that we're going to go down until the weekends. And then the question is, do we just range here? Now, boring, huh? Do we just range here? Go up and then go down? Or do we actually push up? Do we push up because there's more buyers than sellers? Effectively, that's what it means. If you're pushing up, there's more buying than selling. Yeah. If you range here, then we're at a point of equilibrium where the price is being bought and sold in the same quantities, and there's indecision really. If you start ranging here, it's quite indecisive, and maybe you could go up, swing failure the highs, go into higher liquidity, shorts when enter, and then we'll go down, you know. Otherwise, we go up because there's more buyers than sellers. Squeeze, then see what happens. Does it rally a little bit, push up, then come back down for a back test for lift off in April, in the halving month? You know, there's different kind of possibilities. I think if you're looking too long, you have to just wait for the previous bull market all-time high, wait for that to be tested, and wait for that test to be held. And I would think it would be better to wait for like a 4-hour candle at the least, like a slightly mid-term time frame candle if you're looking to long spot. You can long, and maybe what would be a better entry if people are looking to still long, if they're, you know, people say you shouldn't long in the highs, you shouldn't short in the lows, whatever. I think if you have an invalidation, you can do whatever you want. It's all about the invalidation. And if you have a tight invalidation, you can make your money very quickly. You know, you don't have to, it doesn't matter. So it could go down, swing failure, those lows, bounce, and continue this range. This could be range bound. We could be range bound, which is probably what's happening. Could draw a little volume pool. Oh, it's gone back to blue, back to red. That's where we are right now. So maybe it's just going to range for a little bit, and then we'll see what happens. I haven't updated my volume, so let me do that now. Am I on Bybit? Yeah. So let me just get rid of that. Hide that. I'll still like to take this long lower down. But we are making higher lows, so I'm not like necessarily thinking that we will. Look at that, that's quite interesting. So when I do a volume range pull on the whole range, you can see that we're range bound, ranging above the range value area high. So that's quite an interesting place to be. Yeah, that's, I mean, you hold here long enough, you're holding support for continuation, really. That's basically what you're getting. Hold support, continue. Lose support, you go down. Yeah. And we haven't back tested this previous all-time high. Let me change the, let me see if there's a change. That high volume low is just being ignored. I don't like that. I'm just going to delete it. If it's been ignored, it'll probably be ignored again. The value area high is slightly higher. Value area low is basically the same place. And then you're kind of into this higher local range as well. We're trying to get into it. We're kind of, the point of control is at the higher local range value area low. So we're kind of stuck right now. Maybe we're just going to be stuck for a while. Maybe we'll just be stuck for a while. Probably just trade the local range and see what happens. If you lose that previous bull market all time, that won't look good. If you go down and you can't really get back in and you just fall down, then you'll probably see us get back to the point of control, maybe for a bounce. You can't get back up, then you'll start going down. Yeah, that's, if you start losing lines, that's weakness. And if you can't get back in and you confirm those levels as resistance on the way back up, then the price will just go back down again. That's what will happen. I'm not saying it's going to happen. I'm just saying that holding support is important. Lose support, you're going down. Okay. Any questions? I don't really have a trade plan. Just trade the local range probably right now, and I'm waiting for probably higher. I haven't really gone into depth, but I can't see weakness at the moment. All right, I'm going to take a a very short break, maybe 5 minutes, and then I'm gonna have a look at a new fresh look at TRVL.